day, fellow investors. Value investing is about investing in facts, in certainties with low risk. One certainty, unfortunate certainty, is that by the end of this video you will be 10 minutes older. I'll try to save you as much time by sharing my research so that you gain in life and make great videos so that you get more life joy, so that you gain 10-20 minutes. But at the end of the day, tomorrow, we will all be a day older. So that's a fact, that's a certainty, that's a strong trend, and people are getting older and older, which means there is a secular trend, which means there is an interesting value investment proposition with certainty. And therefore, today I want to discuss Fresenius, which is a healthcare company, and we have seen Warren Buffett buying more and more into these healthcare companies. So it's a good point to start researching, to start thinking, and then seeing how it fits your portfolio. If I save you time, if I make you live longer, please click that like button and subscribe to this channel. Let's start with the analysis. There is Fresenius Group, which is a healthcare group from Europe, and there is Fresenius Medical Care, which is just a part of the business, but also traded on the New York Stock Exchange with ticker FMS. We're going to talk a little bit less than this one, focused on the group, but make a valuation on both stocks. The first thing you can see here is how the company really did well over time, and here 2015, 16, 17 I started to get a lot of questions about the company. Sven, what do you think, what do you think? Then when it crashed, more and more questions, and constantly up to here. So we have had a strong upward exuberant trend and then a downward trend, let's say, and for a really good investment in a secular trend, you have to wait for all these guys here to capitulate, and when they capitulate, then it might be a good time to look at the company. And we are certainly at an interesting time to look at this company. Fresenius Medical Care has been much less volatile, which means much less debt, also much less growth focused, much less acquisitions, higher dividend, so stable company. DaVita, we have to analyze it in Buffett's stock list that I'll do probably by the end of the week, so again, subscribe if you haven't. On the stock price, we are in a downturn based on lower than expected growth for both companies, with a little bit also debt issues here, higher interest rate risk, etc. Let's look at the companies and especially at the investing trend. So Fresenius is a global leader in healthcare products and services, 35 billion euros in sales, leading market positions. It has 4 segments. We have Fresenius Medical Care, that is traded on the New York Stock Exchange as FMS. Then we have biosimilars, then we have hospital operations and more project and services to build hospitals around the world. But this is just 2.2 billion, so what is it? 7% of revenues. The key is medical care, and then the other hospital operations, mostly in Europe and Spain, and Fresenius Kabi, the drug company. Fresenius Medical Care is the global leader in dialysis, so if you have such issues, I hope not, and they are the global leader, as they have, what is this, 25% of the market, unfortunately 6% patient growth per annum, which is a terrible statistics, but that's the reality, and 70% of the market is in North America, where it is cheaper to outsource dialysis to Fresenius Medical Care and DaVita rather than have it in a hospital. So that is, let's say, a moat that these companies built. Also, other businesses, hospitals, cater to the trend, and let's discuss the trend. And the trend is really terrible. It's very bad news, but not bad news for investors in Fresenius. So we have aging population. By 2050, 16% of the world will be more than 65 years old. Will I be 65 2050? Yes, I will be in that group, damn it. All right, so healthcare sector globally 6.3% growth, 48% growth of people expected with diabetes, which is something really, really terrible. So as value investors, we also have to think about that, and we'll see later that 60% of Americans, 6 out of 10, has one chronic disease. That's a terrible number, and just thinking from an investment perspective, there is no point in being rich and then being sick, because then you are not rich. So there are, I think, methods to really lower the probability of getting sick. So there is this book that I've read with a lot of scientific data that summarizes scientific research on what you can do to really lower the probabilities of getting sick. Of course, it's very easy. Exercise regularly, not too much, but regularly, and eat healthy. So that's what I also try to do. So when I'm 67 and in that group of aged above 65 in 2050, I can still make videos, have a nice smile, feel good about my life, and of course I wish you the same. So value investing, not only money, but also our health. Živjeli. And here is this disastrous, and here is his disastrous data point. Everybody's so focused on coronavirus because, of course, 1% of those that die, and that's also not nice, but this is the real tragedy. 6 in 10 Americans live with at least one chronic disease. 6 in 10. This is the problem. This is the biggest problem we have to cater to. Nothing else matters, but of course, this is long-term thinking. You have to change the way you eat, the way you train, so you have to change a lot of things, and just give us a pill. It's also not profitable if we solve this naturally, unfortunately. So I hope this changes. So also see how do you feel about investing here and profiting on the disease of others. The trend is unfortunately there. Global population by broad age groups, it's going to almost double above 65, which means more costs. Also globally, projections for life expectancy are going higher. And also, if we look, when you pass the 70s, this is from Sweden, you see how those expenses go up for healthcare. So healthcare expenses going up, the healthier we are, the lower we can do this, keep this. So that's also a value investment. So also something to think about. And unfortunately, as there is inflation in healthcare, healthcare costs are going higher, higher and higher. Look at this. From 6.2% spending of GDP in the 1970s, in the US we are now at 17-18% of GDP, and that is growing. That's a staggering number. So prices will just go higher and higher, which is again a positive trend for Fresenius, but not so positive if you are on the other side of this business model. And you can see here how Fresenius is covering many trends in this market, so we'll see how that works. It's an unfortunate trend, but it is reality. And what they did, how they cater to that trend, they do a lot of acquisitions, so they try to manage debt to EBITDA. They make an acquisitions, then they lower it, new acquisition, lower it, new acquisition. So really a growth company based also on debt, and that's why also we have seen the volatility in the stock price. There is significant amount of debt, and if interest rates go up, this will also be a burden to profitability. Currently, sales growth hasn't been great because of COVID and less patients coming into those facilities, but when things stabilize, unfortunately, the trend should revert to normal. The company is paying out a dividend of around 20% of earnings. Earnings growth has been really good in the past, and they have increased 27 times the dividend, with the dividend increase on average 15% per year. Now, this is also something interesting. The company is consolidating also the Fresenius Medical Care that they own just 33%. So when looking at these numbers, you have to deconsolidate Fresenius Medical Care and really look at just what is the group's share in the business, and you can see here on average cash flows, free cash flows growing to 4 billion, then we deduct the cap spending, we have to deduct the medical care share, and we get to about 1.2 billion from my approximate calculations. So I have created a new table where I systematize all the publicly analyzed stocks, so you can download it for free. The link is in the description below. I have a premium version of this for those stocks that I really cover deeply. You can check that on my research platform. You can click here and it leads to your link to the intrinsic value calculation directly. So I have put here free cash flows in billions, 1.2 billion. I have used the dividend payout 25% as something that they return constantly to the shareholder. And here is now the question, what is the growth rate and what will be the terminal multiple on the future cash flows? If they manage to grow 5%, they expect to grow between 5 and 7%, but they'll make acquisitions. We don't know about interest rates. We keep the discount rate at 10. Terminal multiple at 15, I get to an intrinsic value of 13 billion. For a 10% return, the market cap is 20.3 billion, so it is a little bit overvalued for a 10% discount rate. If the company manages to grow 8% as they expect, but I think they will reach 8% in good years, but not over the next 10 years. The discount rate 10%, terminal multiple 20, then yes, then the intrinsic value, the market capitalization is in line. In a bad case scenario with lower growth, lower terminal multiples, then the present value is really much lower. And I haven't multiplied it here with 0.25, so that has to be corrected. So I have to correct this. I'll correct this in the template and then save it in the link in the description below. Then we have Fresenius Medical, and the free cash flow is actually higher. That's why also and then the intrinsic value is a little bit higher also. Here I have put the correct dividend payout. The dividend payout is here 30%, and the market capitalization for a 10% return, depending on what happens, the growth rate in the future is 23 billion. And if we look at the market capitalization, 20 billion, so it is, let's say, fairly valued. If we go back to our comparative table, we are a little bit overvalued for a 10% return, but for a 7-8%, it is a very interesting return, especially banking on the trend, because I think these stocks will be volatile. When there is exuberance about the healthcare market, then this will go up. So you can bank on that too, because now it's very volatile. So negative sentiment, lower expected growth, then it goes down. On positive sentiment, it will go up again. So that's also something you can play on. So just an introduction into this healthcare trend. We'll be looking at more stocks, especially as I look at Buffett's portfolio. So please click that like button, subscribe, and I'm looking forward to your comments.